How's it going, fellow traders? It's Magic Trader here, and this is the CFTC data for January 22nd, 2019. Here's a snapshot of the positions that were recorded as of that date. And let's get down to examining what the institutions have been doing with gold. Let's take a look here. So, we are not quite up to date with the recent positioning of the institutions, because you can see how many weeks the arrow is pointing to this candle right here. So this data represents this price action up until here. So we still have 1, 2, 3, 4 weeks. By the time we get caught up, it's another 2 weeks. But what we can see here, I mean, we've had a certain theme that we've been watching, right? And that is institutions were accumulating a long position through here. They took profits and then started to accumulate a long, and now starting to accumulate a short position. Because what we are believing is going to take place is this, okay? Because when you look at the evidence and you look at the supply and demand that the institutions have created, and you also see some of the journal posts that I made on the site, you can see that there's very strong evidence to suggest that this is what's going to take place. Okay? So now we look at the data to see if the data is supporting this thesis. Okay? Now you take a look back in December, and what you can see is as price was rallying up, short positions were pretty aggressive. Okay, short positions were pretty aggressive. Now since then they've closed off, okay, because you could see this was starting to be built here in June, even before that, of 2018. All right, so that short position was in existence here all throughout August, okay, which is down here. So this strong aggressive short here was an accumulation of a short all throughout here. Alright, now since that time they have closed them, so taking profits on shorts, and you can see that most of this rally up, longs are somewhat cooled off, but near the top here they become a little bit more aggressive, causing price to move up like this towards that monthly area of supply. Now we take a look at what they're doing with the shorts now that we are hitting supply, and we can see that they are starting to increase their short positions from 86 to 100 to 113, now just slightly down, but still, you know, you look at the coloration of the cells here. This is our sentiment indicator. Bearish, neutral with the climb up, and now we're starting to get a little bit more of a bearish sentiment coming back in. So far what I'm seeing here still is very much aligned with what we believe is likely going to take place with gold in the weeks to come. Now let's take a look over to oil, and we are starting to see more of a push upwards here after removing that weekly area of supply. We look at the data, and what we're seeing in the data is shorts are starting to get reduced, because again, if we are to expect a move like this throughout here and here, they are likely not going to be aggressively adding short. We would expect that in this area up here. Okay, so longs are still very aggressive, but remember, profit taking from up here, you can see the big decline in those long positions from the profit taking, and you can see a big increase from shorts being very cooled off to being more aggressive. So it's likely that we're going to see a continuation of that move to the upside, and as it gets up near the highs, we'll start to see them aggressively add in their short positions. So still watching for that to take place. As for the US dollar, we have this weekly area of supply being hit, but the data is this big green candle popping up from the weekly area of demand. So as that was popping up, we have long positions slightly aggressive, and we have shorts a little bit more aggressive than they were previously in the holidays. Okay, so what that does to long exposures drops it from the 82% that it used to be at down to 76% over the last 3 weeks. Now, I'm not too concerned with that because what I'm really seeing here is strength building on the dollar. This here, as we discussed in the Forex Market Outlook video, is not a very strong area of supply, so it is eventually going to be taken out. When that's going to take place is the question here. But what we can still see here is aggressive longs causing price to go up to that area of supply, and eventually ended up going up to that area of supply, and shorts a little bit aggressive, but I'm not too concerned about that. That's really not telling me much. So going to need more data specifically up throughout this area here. I want to see just how aggressive they are with their long positions. Bottom line is longs are the way to go. Look at the coloration here, very strong green. They were more biased to the long side here, but that's okay, slightly neutral, likely to get back into more bullish territory in the weeks to come. Okay, now we take a look at the Aussie, and again this data represents this candle here right before removing the weekly area of supply, and what do we see? Longs close off from 21 to 17,000, and we see a slight drop in shorts as well. Bottom line is sentiment is bearish, and here as well been declining since these numbers, but I think, you know, profit taking from those shorts, reaccumulate, and then a bigger move to the downside is likely what's going to take place. At least that's what the data is suggesting. Now we look at the USCAD. Again, the data represents this candle here. We've since seen a push to the downside, reaction off of the weekly area of demand here. So as price was dropping, what did we see? Longs closing out from the increase of the long positions here. We hit that area of supply. Okay, profit taking on longs. Shorts right now are very cooled off, so we can see a big shift from the time that contracts expired back in December 18. They were very aggressive with shorts at 51,000, and they immediately became very cooled off with those shorts. Okay, why are they cooled off with shorts? Well, from what I see, they're cooled off with shorts because they're not ready to accumulate a position like this. Or I should rephrase that and say they're not beginning to accumulate a position like that because there is no intentions to cause price to do this. All right, what we can see is aggressively long, take profit on those longs, reaccumulation likely for a bigger push to the upside. That's what I'm thinking. Okay, you look at total positions, still got room for them to add quite a lot to those long positions. Now we look at the US Swiss franc. Let's clear up the chart here, and what we can see is the data represents this big candle here, the push upwards from the ascending weekly trend line, and so as that was taking place, we can see cooled off on longs. This one's a pretty interesting one. Okay, cooled off on longs. So we can see back throughout the summer, big increase in longs, taking profits on longs. It drops down, shorts become very cooled off, just like the USCAD, and now no reaccumulation of long positions. It could be that they're going to be taking their time and maybe a slight decline and then start, or maybe out throughout here they've been increasing those longs. Hard to say because we don't have the data for this group of candles right here. But I think it's safe to say that when you look at the USCAD, you look at this this pair as well, you can see shorts are very cooled off. There is no accumulation of shorts. All right. Instead, what you're seeing is push upwards, big accumulation of longs, profit taking on longs for reaccumulation, likely for a bigger push up like this. That's what I'm seeing with the other ones, the other US dollar pairs. Okay, and that's why going back to the dollar is why I'm not too worried about what I'm seeing here. All right, so let's go back now to the euro. So the euro again is not really painting a clear picture. The sentiment for quite some time has been neutral, Look at that. Ever since last summer, the sentiment's been neutral. I mean, it's just been brutal, with price action. And it is taking its time simply because if you take a look at what's happening on the higher time frames, it's price is moving through a certain phase, and it takes months for those phases to play out. So that's why we're seeing such a long term of this neutral bias here. And when we examine the positions, all you can see is that they increase shorts from 185 to 189, and that comes as this drop as the reaction takes place from the weekly area of supply. So that would make sense. Price hits supply, they increase their short positions. But besides that, there's not much else to see here. So we move on. And next is the pound US dollar. You look at the pound US dollar, we had this big reaction candle here. I believe it was Brexit that caused this one, a Brexit vote. So as that took place, we see a decline in shorts and we see a slight decline in longs. Bottom line, shorts somewhat aggressive, but again, when you look at the markets on a broad range and you include what you see in all the markets, there's a very strong theme playing out. And I've pointed this out in the latest EURUSD report, and I've also spoke in depth about this in some of the classroom sessions and in the Forex Market Outlook video made available to the students. So I won't go too deep into it now, but what we can see is a big increase in shorts, some profit taking, and likely a reaccumulation for a push lower. Okay, now we take a look at the US dollar, Japanese yen. This one's been somewhat different. I think what we have to pay attention to here is the commercial numbers. And we've seen this quite often being the case, especially around contract expiration. What we see is commercials typically doing the opposite of what we would expect them to do. Okay, so we take a look here and we see this big rally candle here upward from the momentum shift demand here, and so you would think there'd be a big increase in longs causing that, but there wasn't. In fact, if you take a look here, longs were closed out from 104 to 68. So this huge drop in price here, what played a large role in that were the non-commercials closing out long positions. Now again, as we teach here at the school, when you accumulate longs, it causes prices to go up. When you close those longs, it causes prices to go down. And that's a massive closure. I mean, you take a look, 104, 85, 68, that is massive. What's going to be interesting is to see over these next couple of weeks what the institutions were doing. But it looks like the non-commercial side and the commercial side were working hand in hand in what took place here. I don't know 100%, but it's pretty clear by looking at the positions. And again, I've detailed this in the latest EURUSD report, what I'm seeing from both aspects. But it looks like they were working together to some extent. Now we go over to the Kiwi dollar, and we see that this data represents this increase right here. 1, 2, 3, 4, 5. Yep, like that. And we can see shorts increasing from 17 to 20, and a slight increase in longs, nothing major. Short bias becoming neutral as the profits were being taken. Okay, price enters into consolidation, profits being taken, enter into neutral territory, and then slightly take a look. Coloration of the cells becoming a little bit more bearish, and net positions as well. So that should tell you something. Alright, ladies and gents, so that's your CFTC report once again for January 22nd, 2019's data. If you have any questions, email me, whiteoakcapital@outlook.com, and you can visit whiteoakfx.com for more information should you need some. Alright, take care. Till next time.